Hello everyone. Welcome back to my channel Accounts Simplified. Today we are going to learn a very interesting and an important topic which is accounting equation. It is the first chapter in accountancy where we will be dealing with practical problems. So make sure you're watching the video till the end. And also in my video, I will be sharing one fun fact with you all. So stay tuned. All right, without wasting much time, let's quickly dive right into the world of accounts. So, before starting our class, I want to give a quick piece of information to my new viewers or my new students. We have discussed the meaning of bookkeeping, accounting and accountancy and their features. I've also discussed about branches of accounting and accounting cycle, the basic accounting terminologies and also the principles of accounting. And in my last video I have discussed the basis of accounting, cash basis of accounting and accrual basis of accounting. If you want, you can watch my videos. Also, I have made a playlist, you can go check it out. All right, coming back to our topic, accounting equation. We have to understand, let us first understand the meaning of accounting equation. In business there are so many transactions taking place in business, yes or no? Sales takes place, purchases takes place. So when we convert the business transactions in an equation form, then that equation is known as accounting equation. All right, I hope it's clear. Now basically accounting equation means where assets is equal to liabilities plus capital, which means the total of assets in our business must equal to our liabilities plus capital. Now these terms I've already discussed in my basic accounting terms. You can go watch that out, but let me just tell you briefly what these terms are. Assets, what are assets? Assets means something which we own or something which gives us benefits in the long run or maybe in the short run. For example, machinery. It is an asset. Stock is an asset. Cash is also an asset because it's giving us certain kind of benefits. Yes or no? Now, what are liabilities? Liabilities are those items where we have to pay. These are our financial obligations where we owe money to someone else, where we have to pay money to another party. And what are capital? Capital means those amount of money which is being invested by the owners in the business. That sum of money is known as capital. Now, this accounting equation is also known as balance sheet equation. Why it is known as balance sheet equation? Because it deals with the items of balance sheet. Now, what is a balance sheet? A balance sheet is a statement which shows the financial position of the business. It is also known as statement of financial position, where the left hand side records the liabilities items of the business and the right hand side records the assets item of the business. Assets means the something which we own and liabilities means something which we owe to another party and we have to pay money. We haven't paid the money, but we have to pay money in future. Now, why this accounting equation is important? Accounting equation is very important because it lays the foundation of the double entry accounting system. Now, what is double entry accounting system? It means whatever transactions taking place in business, it will always have two-sided effects. One is debit and the other is credit. For example, in order to make your concept clear, let me give you an example. You are planning to run a business of your own. So you cannot just run a business that, or you have got an idea and I'll be starting my business. For that, you have, of course, idea is needed. But for that, you have to introduce certain amount of money into the business. Yes or no? So what happens is that when you introduce money into the business, that money is known as capital. because you are the owner of the business, and whatever amount of money you bring into the business, that sum of money will be known as capital. As per the business entity principle, what does it states? It states that owners and business are two separate individuals having distinct liabilities. So owner is different and business is different, and whatever transactions taking place in business, we will be recording from the point of view of the business and not from the point of view of owners. All right. So what happens when you bring the money? The cash account will increase, yes or no, and also the capital will increase. So um, so you see, two accounts are being affected. And another example, let me give you. When sales happens in business, what happens? Cash comes into the business, yes or no, and goods goes out from the business. So what happens? Two accounts are being affected. We have two impacts. So every transactions, whatever transactions taking place in business, will have at least two impacts. For example, purchases. In case of purchases, when you purchase goods from your suppliers, what happens? You are paying money to your suppliers, yes or no? So cash goes out from the business and goods come in. So you see, two accounts are being affected. So that's called the double entry system. Whatever transactions taking place in business will have two effects. One is debit and the other will be credit. Okay. When assets increases, assets always have a debit balance. So if assets increase, it will always have a debit balance, and if assets decrease, it will have its credit balance. And for liabilities, they always have credit balance. If increase in liabilities means it will have a credit balance, and when the liabilities decreases, it will show a debit balance. So I hope till here it's clear. I'm assuming that you have understood. Okay, moving forward. Now you will have to keep in mind certain rules while solving these accounting equation problems. I won't be solving the practical problems in this video. I'll make a separate video, but in this video, just keep these rules in your mind. The first rule: every transaction will have at least two impacts. One is debit and the other is credit. Whatever transactions takes place in business, it will affect two accounts. Okay. The second is, we know accounting equation, as I said in my initial part of my video, accounting equation is equal to assets. Accounting equation is where our assets is equal to liabilities plus capital. The third rule is all our expenses and losses will be deducted from the capital. Whenever expenses incur in the business or we have certain losses, then what happen in such scenarios? We will have to deduct it from our capital. And the fourth rule, when revenues and profits are there in the business, then it will be added back to capital. What does it states? All our revenues and profits will be added back to capital, and all our expenses and losses will be deducted from the capital. And whatever adjustments are there in the capital will be made for the current accounting period. We won't be doing the adjustments for the previous year nor for the future period, but we will be doing it for the current accounting period. All right. In order to make your concept clear, let me give you an example. So you have decided to run a business of your own, all right? So in such scenarios, what happens? You brought cash. You bought cash, say for example 50,000. So that sum 50,000 will be known as capital because you have introduced the money into the business, and whatever the owner introduces the money into the business, that sum of money is known as our capital. So cash will be 10,000, capital will also be 10,000. Now, say for example, you want to buy a land, because you cannot just run a business in a place of nowhere. You need a land, yes or no? So you purchased a land, but you found that you don't have sufficient money. So you decided to go for loan to buy the land on loan basis. You have taken loan from the banks, say for example. So the lands land worth is rupees, say, just assuming, okay, just say is 20,000. So you have taken loan from the bank 20,000 and you purchase that land for 20,000. So in the asset side, you will be writing land 20,000 and loan, bank loan 20,000. Now, in the next case is that you purchase a land, you also have the capital. Now you want to purchase goods. Goods means our stock, say 40,000. You want to purchase, you have purchased goods worth 40,000. From whom you have purchased, and these goods you have not purchased on cash basis, but you have purchased on credit basis from your creditors. So in the asset side, you will write stock 40,000 and creditors on your left hand side, you will write 40,000. Okay, so when we total this liabilities column and the assets column, it must be equal. If it's not equal, that means your treatment for those, your accounting treatment, you have not done it correctly. And if it's equal, that means you have done the accounting treatment correctly. So if you sum up, you see the total is equal. The liability side and the asset sides are equal, which means all the accounting treatment you have done it correctly. Hence, in conclusion, we can say that our assets will always be equal to our capital plus liabilities. No matter whatsoever happens in the business, this accounting equation will always hold its place. It will where our assets will always be equal to its capital plus liabilities. So I hope you have understood the basic definition of accounting equation. If you found this video informative, then please give it a thumbs up and also subscribe to my channel. But yes, before winding up, let's, as I've promised in my initial part of my video, about the fun fact. So here's the fun fact. Do you know where did this accounting equation come from? The answer is, it came in the year 1494 by an Italian mathematician, Luca Pacioli. Yes, Luca Pacioli formulated this accounting equation, and he is also known as the father of bookkeeping as well as the father of accountancy. So I hope you enjoyed watching my video. If you did, then please subscribe to my channel. Till then, record, reconcile, and repeat. I'll see you soon in my next video. Thank you so much for watching.